2018's been a really good year for Compass and a very important year as well. So we've seen organic revenue growth of 5.5%, an excellent year of free cash delivery, and of course we're now growing our dividend by 12.5%. So a good set of all-round results. More importantly though, I think we're making real progress on the strategic priorities, the 3 Ps, performance, people and purpose. And I'll just touch on each in turn. Starting with performance, we obviously announced earlier in the year that I wanted us to focus more on the core of food, and we announced that we would be selling or exiting around 5% of the business. We're about 1/3 of the way through that program. We've done it with pace, which is great, and that's really going to allow us to focus now on the operational priorities of pricing, purchasing and productivity. And focus on those 3 operational priorities will really allow us to unlock a new level of efficiency and performance within the business. So a really good start on performance. Moving on to people, we've set out a set of new initiatives which underpin our people proposition. And this is very much about moving on both our employer brand and our employment proposition. By doing that, we will really be able to recruit and retain the best staff in the industry. Very, very important to us becoming a true people business. And moving on finally to purpose. Purpose is all about putting our belief set around what's important in social and environmental matters at the heart of the business. It's all underpinned by a safety culture where we care for our consumers, we care for our employees and we care for each other. We've set out the roadmap. You'll hear more about it over the coming months and years, but I think we've made again a really important start on raising our game around social purpose. North America had a really good year again in 2018. Organic growth of 7.8%, which is quite simply excellent. We've seen retention rates of 97%, so of course we're doing all of the right things around quality and service with our clients. We held margin at above 8% for another year despite some significant cost pressures. So it's been an all-round strong performance from our North American business. And I think most pleasing of all is that the growth is broad-based across all sectors and all subsectors. And that gives us real confidence around the sustainability of that growth for the future. Europe was a bit more of a mixed performance. We've seen really good growth in the UK, a little bit more subdued in continental Europe, although we've enjoyed an uptick in the fourth quarter, which I think gives us momentum into next year. And of course, on the margin side, life's been a little bit more difficult. We've seen some challenges on both cost inflation and the consumer in the UK. As always, we've taken the actions in the first half. And I think we're pleased to see that we're getting the benefits of those into the second half and should underpin our performance as we go forward. Again, rest of world, we're seeing some really great growth in a few of our international markets. So across Turkey, China, India, and our Spanish-speaking LATAM countries, our growth is over 20%, which is really excellent. But of course, we're still suffering in Brazil, where we've got subdued volumes, and also in the decline in the oil and gas sector. So in the round, growth was 3%, and a really super performance in a number of markets and the issues that we've known about for a while. On margin, a very good performance. I mean, we've seen a renewed focus on pricing and productivity, which with the benefits of the restructuring program we did in 2015-16 has really benefited the region's margins. So we've seen a very good performance there. So thinking about our cash performance in 2018, again, it was very strong. We delivered £1.1 billion of cash, which was an increase of nearly 20% over last year. So a very strong performance. That's allowed us to de-lever to our 1.5 times target. And of course, as we look forward, we also have the opportunity of raising proceeds from some of the planned disposals in 2019. That combined with what we expect to be another year of strong cash delivery from trading means that we have capacity for investment within the business, either through CapEx, as we always say, through M&A, and yes, we're looking at some interesting opportunities in all of our regions at the moment. And to the extent that we don't use that money within the business, our model says that we'll return that to shareholders, and we would expect to remain in line with our model. In terms of trading, as we look into the next year, I mean, we're very positive. Our expectations are positive, and we expect growth to be in the middle of the 4 to 6% range, with some modest margin progression. So that will be another strong year in the Compass story.